Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Let's look at the hourly and we'll talk about the daily. The key is this. Tuesday down in the 45s. Yesterday was about weekly pivot and monthly pivot, which are tied up at the 24.58 area. It was about all of that holding. And that was able to hold, and you were able to see some extension to the upside towards the end of the day. You had a quick test off of the evening open down to touch weekly pivot, monthly pivot again. And what you've seen from there is a potential higher low and a move up higher. So the bottom line is this 58 area continues to hold. And as long as 58 to 60 continues to hold, that's an area that you can lean on for longs. And that's what we did in the room last night. And that's what we're going to continue to do throughout the day until we start to see some cracks in this 58 to 60 area. We've seen a couple moves back to 64.5 off of some of this ECB news. But other than that, it's just kind of a steady move up to 67. It's kind of chopped around between 65 and 67. So what do the bulls need to do? Well, number one, the bulls need to take out yesterday's high coming in at 69, and they need to start to go to work on this 71 to 74 area that was trouble on Tuesday. So in looking at the daily, you're starting to see support here at the blue line. That's the 9-day simple moving average. Last night, yesterday, remember we had this really whippy candle on Tuesday. The whippy candle, yes, but what you've seen was here and here, support at the 50. Last week, here, back there on the 21st of August, support at the 100. So the ball is really in the Bulls' court to go ahead and take out 80 and go to work on 88.5. As long as the daily mid-band, 9-day, wannabe support, it can be a springboard to do that. If you're the bears, what do you need? You need a hard break. A hard break of what? 58. Then, if you get that, then the next time you deal with the red line, the next time you deal with the 50-day exponential, you better win that battle. If not, it's going to continue to look like support. The dip buyers aren't stupid. They're going to come in and defend these areas and they're going to take them back higher. Why? Because that's what pays. That's what pays. People say, well, why the dip buyers this, why the dip buyers that? Because every time they do it, they get paid. That's why. That's the bottom line. And when you try to get into the whys and wherefores and you start talking geopolitics and whatever else you're doing, what you're just trying to do is come up with a scenario in your mind where what has paid is now going to not pay. And that hasn't happened very often. When it does, that's great. We're short, and it works out nicely. You see a couple big down days here. I think 2017 has been a much more two-sided year than we've seen in the past. 2016 was basically a choppy year. This has been a little more two-sided, but unless the bears can break 58, you're not going to see much more two-sided action this week. You've got 2 days left. Typically, what you see in the mini is the side that loses the battle over weekly pivot early in the week pays the price late in the week. Well, it's only a 4-day week. We are, as of 9:30, we're going to be late in the week now. So the bears are really going to have to fight back and break that 58, or they're just going to get dripped higher from now until, tomorrow at 4 o'clock. All right. Everybody have a fantastic day. I will catch everybody on Twitter and Instagram for the midday update. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.